All right, so Friday we know that the crypto market just took a dump and just shot down. I'm going to talk about the two things you can do to make sure you don't get caught up in that. And then also, a lot of you might say, well, I know what happened. I'm not going to get caught up in that, but I think most of you will, or a lot of you could potentially get caught up and not even realize it. So let's talk about a couple things real quick. This is the total market on a 5-minute chart. I wanted to show you that in these 5-minute spans, this long one here, how much did the whole market go down? Well, it went down to this other wick. It went down almost 11% in a 5-minute period of time. In a 30-minute period of time, starting here and going to the bottom, it went down a total of 16%. The total market, as you know, many coins went down more. Instead of getting into why all these things happened, understand that one, leverage. Be careful with leverage. I talk about using leverage. Leverage is when you're not buying the spot. You're basically using contracts, perpetuals, whatever you want to call them, derivatives, and you're borrowing crypto. You're using that leverage and there's a liquidation price. You can get liquidated. When things happen real fast and computers just start liquidating, it can take you out. Personally, I do trade. I do use leverage, not a lot, but always I do very short-term intervals, not long periods of time. The large exchanges are really not going to let you hold a very long-term position, whether it be a long or a short. And if we're in a bull market, it's going to be a long because they're going to be on the hook for it. So anyway, stay away from leverage unless you know what you're doing. And even if you know what you're doing, it's still very hard. Knowing what you're doing doesn't mean you're going to make a profit. You have to be extremely careful, and it needs to be money that you're willing to lose. It can't be your whole portfolio. Even if you're doing leverage, I would suggest it be a very small amount. Big dumb animal, don't do what I do, not a financial advisor. That's my disclaimer. If you want to help support me, please do subscribe, hit the like button. Also, there's a join button if you want to support the channel. And at the end, I'll talk all about my crypto school because I teach all things crypto related and I do daily updates. Now, the second thing, so one is leverage, but another thing people may not have thought about is for those of you like myself that also take loans against their crypto, whether it be Aave or SuiLend or Bonzo, you're able to put your crypto as collateral and take a loan. If that collateral drops in price really fast, you may not be able to pay back some of the loan or add more collateral fast enough, and you will get liquidated. Now, in those cases, what happens? Well, they're selling your crypto because it's over collateralized, and they're paying off the loan when the value of the crypto comes down. So are you going to lose money? Well, no. Your loan will be paid off, and your crypto may be gone. So you may end up with nothing. It's not what you wanted. You wanted to hold on to crypto, hoping it would go up and pay off your loan eventually. So, in those cases, what can you do? Well, two things. One, have a very low LTV. In other words, don't take a lot out. But as you notice, a lot of these cryptos dropped. So the second thing is the least volatile assets, the assets with the largest market caps like Bitcoin and Ethereum dropped the least in this sell-off. If you look at some of these altcoins, they dropped, some of them, it was unbelievable, 80%. It happened so fast, some people who were taking loans against more volatile collateral would have been sold out. In other words, they would have taken that collateral, the collateral, sold it, the crypto, and then paid off the loans. So if you are involved in loans, I am. I take some against volatile collateral. I've got to be very careful. And less volatile collateral. Going forward, I'm going to be doing a lot less volatile collateral just to be safe. That's a second lesson learned. Okay. Now, what I wanted to point out is, and I said that you might get caught up in this and not even realize it. You're saying, well, I don't do leverage and I don't take loans. I'm fine. Hold on. If this market plays out the way it has in the past, just like any stock market, crypto market, we've got ups, we've got downs. If the bull market does take off and things pull back, well, sell-offs can happen very quickly. So even though that was the total market and it happened for very specific reasons, it could happen again. Who cares why it happened? What matters is, it does matter why it happened, but what matters for you is to say, I just don't want to get caught up in it. Here is Solana. Now, this is a weekly chart. This is the last time we had a bull run back in 2021. Look how much it came down from this point in time to here. These are large drops. Now, these are weekly. I could zoom in more, but if you look at this particular drop, that's 26%, just that one bar. And it may have happened in a day. I don't even know. Here's another larger bar. Well, let's just look at the top. And good grief, if you went all the way down here. But if we just went from there to here, which was let's say 1, 2, 3, 4, 5, 6, 6 or 7 weeks, it went down 65%. But that was almost a 20% drop in 1 week, and that could have been in one day. You're going to want to, or at least, again, not financial advice, but I'm going to be selling in chunks on the way up. I'm also going to be putting stop losses behind some of those. So if it drops too much, I'm going to get out. There will be pullbacks, but you got to watch the total market, because as you noticed and may have read, that if you were trying to trade manually, go in and put in an order on some of the exchanges, they weren't able to execute your orders because things were dropping so fast. It was all computerized liquidations, stop limits, orders to buy, orders to sell, you name it, that was making this just spiral down. So I would suggest that you sell in levels, you take profits, and you don't want to be running for the exits when everyone's running for the exits, because you may not literally be able to get out. Last thing you want to do is hold on to all of your crypto to hopefully sell all of it at that peak price, which literally it's extremely hard to get, because as you can see, once things drop, they can drop really fast. That was it. Just know that you've got to be smart, because you can get caught up in these sort of drops without even realizing it. And they happen so fast, before you know it, everything's gone. So I would rather have 60%, 80%, 90% of the all-time high than take the risk of going to the all-time high and not making it. Please do listen to my crypto school. Have a great day. Love how I break things down? Then hop into my crypto school. You'll get step-by-step courses on everything: buying, selling, staking for yield, borrowing, lending, even going fully debanked. Plus, join lively crypto chats and catch my daily market updates. And lastly, if you just want to help support the channel, there's a join button just below this video.